Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun. Good morning, everybody. What a weekend. Oh my gosh. I can't even believe we are here to this point. I don't know if I can trade this today, man. Look at the treasuries. We have only been open for 10 minutes and we are already up, what? 9, 3, 12, 24 points, ticks rather, 24 ticks. Like, what the heck? This is nuts. This is absolutely nuts. Good afternoon from Bahrain. Oh, that is so nice. Thank you. I love to know where my viewers are from, and I love it when there's people from new places. So let's go to the charts. Even though, I mean, I don't know how much we can actually gain from looking at all this. Oh, we gotta roll over the E-minis today. Cool. Yes, sir. All right. So Friday was a dumpster fire, and the treasuries just went absolutely wild. Look at that overnight move. That is just crazy. That's a whole 2 handles. And they're looking like they want to go further. Where are the rates at now? We're below 3.5. We are below 3. Well, but that's where we were just only a few weeks ago, right? So I don't know. So we're coming back into those like 116 areas is kind of where it gets interesting, isn't it? Over here in the S&P 500, well, they started out, they recovered by quite a bit, but they are now down again this morning as some of those regional banks are still under pressure. So we're going to keep a real close eye on those today, all right? Oil down, natural gas, not too much action in natural gas. Gold and silver up big, like 1900. That's crazy. I mean, there's still some big handles that we've lost in the past here to recover if gold is going to take off. Yeah, Kappa getting hammered. Bitcoin, well, Bitcoin continues to just like defy gravity here, man. I mean, if there's like a real recession, I don't think that Bitcoin is going to do so well compared to gold, but we'll see. We'll see. And the dollar down considerably as monetary easing comes in. But I mean, that's good for everything else, right? So this is where we're at. I think that we could play around on sim here, but this is just crazy stuff. This is crazy stuff. SVB selling all its bond purchases. Well, they already basically, well, you're right. So they already kind of took the big loss, but now they are like auctioning off everything that they own, right? I think that people are going to be surprised. I think that SVB, well, I think that probably what ends up happening, right, is another institution will take on all of their obligations. That's what I think is probably going to happen. But if that wasn't to happen and it was just like FDIC and depositors didn't make their money back, I think that it would probably be like you get 90%, 90 cents on the dollar or something like that, right? Ninja Trader quadrupled their margins. Oh, they haven't done anything yet. That's funny. That is funny. Oh, there was like another crazy move there. I'm not seeing anything. Okay, PNC Financials is not in talks to acquire SVB Financial or Silicon Valley Bank. PNC spokesperson says. Okay, so the issue that we've got this morning is PNC is like a dumpster fire. This is like another bank that's being put under pressure from bank runs. I think that what you might see today is there could be some more bank runs that ultimately don't amount to much. But let's just see. I think that my temptation in situations like this, my temptation is to try and predict the future. I mean, I'm a speculator, right? And in some instances, the risk reward makes sense to try and predict what's going to happen. But in this kind of situation, things just get so crazy that it's not worth trying to play that game. So, and you know what? We don't have to, because we can just kind of sit and wait for major headlines. And then when a headline comes in, you know, trade the momentum off of the headline and you'll still do just fine, right? Buy on pullbacks, maybe. Well, the Treasury terrifies me right now. The Treasury terrifies me right now. But you know what? I want to buy something. I don't know if it's today. I don't know if it's next week or 2 weeks from now, but I want to buy something, man. I've been waiting for this moment for 15 years. I am ready to go. I'm ready to go, and I look at it, and it's terrifying. This is just such a crazy market right here. Look at this going. They gonna go again? They're gonna go. Well, that's a. We'll do 2. Okay. Okay. Well, I don't necessarily like how that's playing out. Just dump rates and let it go. Okay, so here's the conflict inside of me, right? Zions is now top 4 hedge fund shorted. Yeah, it sounds fun. They let them get pummeled into the ground so we can buy calls. I'm still willing to buy Zion 50 calls for 5 cents. Totally sounds like a winning trade to me, man. That did not work. That trade did not work out very well for me, did it? See, this is exactly why. Good thing it was on Sim. You think I'll get 5 cents? I kind of wonder. So I think that some of this volatility that we're getting, I think that at 250 I should just take the stop, right? So we'll try and be serious about this, right? Trading Floor Audio says Fed swaps now show no further Fed hikes as of the most likely scenario. Okay. So I was gonna get into it. Like, here's where I'm having trouble. Is there's a CPI report tomorrow, and what if inflation is still high? I am not convinced that this banking failure that we're seeing here is going to result in like an immediate recession sort of a thing, because that's kind of what the market is doing right now. Is they're saying like, this is like 2008, everybody's going to lose their jobs, we're going to have a recession within the week, and the Federal Reserve is going to have to start lowering rates, etc., etc., etc. But I'm kind of looking at this like, I think they're doing a pretty good job. I think that this is going to be contained and not be that bad, and that they'll just move on. And that later in the year, maybe they don't raise next week. I can totally see that one now. I originally said that they're still going to do 25 basis points. I'm going to reserve the option to gloat if they raise 25 basis points next week. Okay, but I don't really know at this point. I don't really know at this point. I'm concerned about that CPI report tomorrow though. Like, if that CPI report tomorrow comes out hot, are they really going to be able to do that? I don't know, man. It's funny because the delta is relatively normal. It's just you have to trade across 16 ranges. Well, dude, I mean, look at the liquidity. The liquidity is effing crazy. It's just absolutely crazy. Okay, so we need to follow. What is it? PNC? PNC financials? This one is probably halted, huh? I'll bring the trade halts over here so we can see for the historical record. Yep, Signature Bank has been halted since 4 a.m. my time. Ooh, mama. Oh, no, these are Eastern time. Since 4 a.m. Eastern time. Along with SVB. Okay, what is the small bank sector? What's the index we need to be looking at for regional bank sector ETF? Well, we're doing the AI shares unless one of you guys comes up with a better one. IAT. No, that's not the actual ticker, is it? That ticker symbol doesn't seem correct. That yeah, and it's not even pulling up for me doing that. All right, let's go to zero hedge real quick. Could your bank be next? Actually, it could. So something that really bothers me about this whole thing is that the fear mongering on social media, man. There are so many people that just want the world to burn. Guys, you don't want the world to burn. I promise. It really sucks. It really sucks. The Ed, FDIZ, TSY bailout. They're pointing out that gold is taken off. Man, what is... I thought that they would tell me a ticker symbol in there. Market realizes bailout is insufficient. I don't know if I believe that's correct. So, like, this whole thing where there should be no reason for a bank to go under. Other than, well, okay. Other than people being stupid, there should be no reason for any of these banks to go under, right? Yeah. First Republic, Credit Suisse, that could be a problem. I guess we maybe need to put Credit Suisse on there, man. HSBC pays $1 for Silicon Valley Bank's UK unit in rescue deal. Oh. Maybe this story. Well, how about we do this? Let's do XLF. That's right. Is that? No, that's not right either. Select regional banks index. Oh, maybe if I go like this, maybe all. Let's do that first of all. Regional bank. There we go. KRE. Oh, there's IAT. How come it didn't show up before? Oh, because it's a fund ETF. Yeah. So does that mean it's a open-end fund? E-mini, S&P, regional banks, select industry, SXB. That one sounds better. Is that what? That's from CME though. That's a future? That's a thing? I did not know. I think KRX probably sounds more appropriate. It's just that we won't get any data until the stock market opens on that one. And if we do this one, oh, okay. Cool. And what do I have down here? Oh, SIVB. Yeah, we don't need that anymore. Well, let's add Zions Bank because that's the one that I am interested in. New pane. Okay. And then we can close all these. And we can check on trading halts. $130-point drop in the E-mini overnight last time I remember something like this was due to CP. Well, it reminds me of COVID. I mean, look, this liquidity hasn't been like this in the treasury since COVID. This is a flash crash. I can't trade this. I don't think that my trades allow me to I don't think that my rules allow me to trade this. Bonds are pricing in immediate recession in pipeline. Just 3 weeks ago, equities were pricing in no landing. Let that sink in. There is a repricing event coming in equities today. It's going to be ugly. Could be. So we just got to remember, man, market is not efficient, right? And in this situation where the market is gonna overdo it, right? Oh, there's somebody's going to be talking about the banking sector at the top of the hour. Traders only see 50% chance of half-point hike by the ECB this week. I don't know, man. Am I wrong? I think that their solution is kind of clever and should be able to fix the direct problem. The only issue I see is that the problem right now is not anything like real. It's all in people's heads that they're these bank runs, right? And that's causing pressure on these banks. So so I would hope that today they try to do a bank run and it fails, and then everything kind of blows over, right? And then hopefully like CPI comes in line. If CPI did not come in line, that would be really bad, right? I always forget to turn on my stupid fan for the camera. Sony, if you could make an A7 IV with a fan, that would be great. Jimmy Oreo says, please stop helping. Nah, they would. The market needs help. Like straight up. Yeah, oil is like nuts. Down $5. It's nuts. Like real talk though. This is what happened in 2008. Like it's not the same kind of contagion and risk and everything else like that. But what is similar with this in 2008 is that the market came to a a crisis point. And what happened in 2008 was the regulators, or whoever we want to call them, the plunge protection team guys, said we're not going to help, and they let it fall further. That's what happened in 2008. 2008 was like Silicon Valley Bank went under, and the government said, yeah, we're just gonna sit here and watch it happen. And then things went further, right? That's what happened in 2008. This time, regulators over the weekend saw what was going on, decided to act. So that means that they're going to prevent the nasty, the super nasty, whatever. Hopefully, I mean that's what you'd hope would happen at least. Blow my nose here. Hold on. Well, okay, that's funny. Charles Schwab, more than 80% of our total bank deposits fall within FDIC insurance limits. Yeah, that's a little unnerving. That banks are like, no, don't run on us because you're FDIC insured. All you small businesses though, you're screwed. What a week today has been. Dude, this is gonna be, the equity open is gonna be bonkers. Joseph Wang, Fed Guy 12 tweets. Oh, this is a good tweet. One reason why First Republic Bank looks like it's imploding could be because it actually can't benefit from the Fed's new bailout facility. You need treasuries and agency mortgage-backed securities to tap the facility, and they barely own any. Well, they may just be screwed. I don't know. Wait, is Papyrus IQ joking? I started trading bond markets this morning and it's been a very steep learning curve. Taylor Swift? What? Are you? He's making that up, right? Taylor Swift is not trading the bond. Has Taylor Swift been watching my... Because listen, I'm not a huge fan of Taylor Swift. But if she watches my stream, I could be. I could become a fan. Anything for you guys, right? I don't know where this is. So this is just so zigzaggy, man, in the treasuries. Like, that could have been a top for the day for all I know. He's joking. Oh, I get the joke now. I get the joke now. He's saying that that's what Taylor Swift looks like now after trying to trade the bonds this morning. Look at that chin, man. Look at my chin. There's gray hairs there. My dad did not have gray hairs at 37. Is that an old joke? Ah. Well, now I'm embarrassed. Now I'm embarrassed. Forget I said anything about Taylor. We don't like her. Are there several like that? I keep thinking that someday I'll find out that one of you regulars was actually a famous person, and it will just be all in awe, and I'll have made that famous person more rich. That's what's gonna happen someday. Well, they seem to be rotating around 15, but so the difficulty that we have in a market like this. So understand there's like liquidity holes, right? Where you can get these areas where price becomes constrained, so forth, right? Well, the problem is that when the volume is still ticking 1,000 lots and the available market liquidity is only, 200 to 500, then it doesn't matter. It is just whatever the market orders are going to be is where it's going to go. So we need something that really strongly suggests which direction the market orders are going to go. And I don't think we have that. I don't know if we're going to get that. This morning, all my drawing tools were messed up with either the rollover or the DSL adjustment. Has that ever happened to anyone? I don't know. So by the way, somebody had asked me about this the other day, and we kind of like got ADHD about it. But I haven't tried the new Ninja Trader version, like 8.1. Haven't tried that. I'm actually kind of scared to. Because I'm afraid that they may have changed some of my little hacks. But I can't even get in, like create an account and get in to try downloading it. Now it's higher. Well, so I don't know why you're drawing. So when you say your drawing tools are messed up, does that mean that like the drawing, the drawing tools that you've already put on. Oh, sorry. I have the camera zoomed out so that I can record vertical, and doesn't look very good in my opinion. Like I much prefer it right here. But when I do that and I look at the camera over here, the vertical camera, my head takes up the whole screen. It's too much. So I don't know what I do there. Maybe what I need to do is change my camera to a vertical orientation. Oh, you're in the I want to watch the market. Yeah, and I have my micros hidden here, right? Because we need to watch this regional banking sector ETF. So, wow, the Treasury's coming all the way back to the open already now, huh? Oh, okay. So Biden is supposed to be speaking.
Took control of Silicon Valley Bank's assets. And over the weekend, it took control of Signature Bank's assets. Treasury Secretary Yellen and a team of banking regulators have taken action, immediate action. And here are the highlights. First, all customers who had deposits in these banks can rest assured, rest assured they'll be protected and they'll have access to their money as of today. That includes small businesses across the country that bank there and need to make payroll, pay their bills, and stay open for business. No losses will be, and this is an important point, no losses will be borne by the taxpayers. Let me repeat that. No losses will be borne by the taxpayers. Instead, the money will come from the fees that banks pay into the Deposit Insurance Fund. Because of the actions that our regulators have already taken,
Biden says no losses will be borne by the U.S. taxpayers. Money will come from insurance
if and
fund
when they
fees.
need them. Second, the management of these banks will be fired. If the bank is taken over by FDIC, the people running the bank should not work there anymore. Third, investors in the banks will not be protected.
Oh, Trading Bunny, I think you're dealing with the rollover. So here's what you should check.
That's how capitalism works. And fourth, there are important questions of how these banks got into the circumstance in the first place.
Tools.
We must get
options,
the full accounting of what happened and why those responsible
market data,
held accountable.
Global merge policy, and see what your global merge policy is.
And finally, we must reduce the risk of this happening again.
And I think that to resolve your problem, it needs to be either merge back adjusted or do not merge.
Like Silicon Valley Bank and Signature Bank, including the Dodd-Frank law to make sure that
maybe I'm wrong.
We saw in 2008.
Maybe it needs to be merged non-back adjusted.
Unfortunately, the last administration rolled back some of these requirements. I'm going to ask
try and blame it on the last guy. Yeah.
To strengthen the rules for banks to make it less likely this kind of bank failure would happen again, and to protect American jobs and small businesses.
Biden says I am going to ask Congress and regulators to strengthen banking
Americans
rules.
Can rest assured that our banking system is safe.
And we will not stop at this. We will do whatever is needed.
So if you change it to non-back adjusted, then it'll probably fix it. Like,
let's also
you'll see your drawings in the correct place.
We've made strong economic progress in the past 2 years. We've created more than 12 million new jobs. More jobs in 2 years than any president has ever created in a single 4-year term.
So with that, let's change this to HSM.
For 14 straight months. Take-home pay for workers is going up, especially for lower income workers. And we've seen record numbers of people apply to start new businesses, more than 10
rollover to June.
More than 10 million applications over the last 2 years starting businesses. Now we need to keep this progress going. That's what swift action that my administration over the past few years is all about. Protecting depositors.
Eurozone money markets now priced in a larger probability of a 25 basis point ECB rate hike on a Thursday than 50 basis
Thank
points.
you. God
This is
bless
according to
you. May
ICAP
God
data.
protect our troops. See you in California.
Mr. President, what do you know right now about why this happened? And can you assure Americans that there won't be...
Well, you know what? I think that was a rare win from Joe Biden. He didn't fuck it up when it counted. And I think that everything that he said there was really good. You know,
now concluded his remarks and left the stand.
You know what? Like, I really do think that the guys that we have in the Treasury and the Federal Reserve right now are pretty good. They're doing a good job so far, I think. We'll see. Maybe this turns into a dumpster fire and we're like, why did you do this? Why did we do that? But right now, to me, it feels like they're doing a good job. ECB rate pricing of 25 basis points for Thursday is a classic case of throwing the baby out with the bathwater, says Brannigan. Well, I feel like that's the whole thing that the market is doing. I don't know if any of these moves really will last. Like S&P 500? I want to buy it. I feel like we should buy it. No, I don't know. Let's come back to a daily chart, shall we? Interesting. So they're at that 20%. Just note, these aren't Fibonacci levels. These are... Oh, in fact, I don't even think I have... Do I have it correct here? I don't. What's with that? I think it got changed. There we go. There we go. All-time closing high. So we're below 20% from the all-time closing high. In an area where there has been some support before in the long term. But I don't know. I mean, I feel like that the situation is worse than it was in December. Maybe we should be lower. Maybe we should be back to the 3600 area or something. You disagree? Please do expand. Charles Schwab investments at Schwab are held in investors' names, are separate and not commingled with assets at Schwab's bank. Yeah, okay. So we're back to 4.5? Not quite. Perfect dramatic music for this situation. Oh, I think Octavius was disagreeing with, I thought that the regulators are doing an okay job. Now, on the rule change, Biden's saying, so there's this rule change, something that he was talking about in that press conference that we should comment on. There was this rule change where basically they said that the regional banks don't have to go along with some of the banking requirements that the larger banks do. And I remember only not too long ago them talking about that. I think we even commented on it. I don't remember what my thinking was at the time. I'm gonna bet that they are able to change that though, because it does seem to me that some of these regional banks are not holding enough collateral, or aren't holding enough reserves. They had to know this was coming. Well, so I don't know, man. Here's the thing about this sort of a situation is that it happens so quickly. I mean, look, were any of you on last Wednesday, like, oh yeah, next week the banking sector is gonna crash? Like, I don't think very many of us were short last week thinking that this was all gonna fall apart so quickly, right? Like on Thursday, when it was happening on Thursday, I didn't really know what was going on until after the market closed. I was like, wow, man, like, okay. There's just you know, it's a fractal system. It's a fractal system, and fractal systems have this tendency to like collapse or explode really, really quickly. Those changes can just happen real fast sometimes. So I don't know if we can say that they had to know it was coming. I think that the Federal Reserve had to have known that at some point raising interest rates was going to cause strain on certain institutions, right? Just not that they thought that they had any forewarning for this particular situation. Well, seems like the treasuries are trading a little bit better here. So when the S&P 500 starts up, that things get fun. Oh, how do you roll over without the box? Okay, so you come to tools, database management. And then I think you might want, so up here, there should be like instruments to roll over. And if you don't, one thing that you might need to do is come in here and make sure like future expiries is checked and update your instruments to make sure that they're all correct. QJ, good morning. Yeah, they never changed. Well, I think it was worse than that though. Like, I don't think that Biden was talking about the reserve requirement. It was some other requirement. Because everybody's subject to the reserve requirement. But you are correct that the reserve requirement is still zero, and I don't understand why it's still zero. I feel like that after the summer of 2020 that they should have moved the reserve requirement back to 10% or whatever. Yep, we're talking about the bank collapse. Oh man, did the treasuries already bounce back up here, huh? Because we're idiots. I mean, it really was like, well, nobody's complaining, so let's just leave it this way so we can make money. Like, seems to me like that's what happened. Oh, I don't want full screen mode. I want hold on. I just want to get rid of the borders. Well, whatever. I'll leave it alone. Okay. So it was merged non-back adjusted. That's what your problem was. Yeah. I think that what happens is that like, so back adjusted means that it changes the price of the earlier contracts so that they match the current contracts prices. so that you get like a because when you do non-merge back adjusted, then what you're going to get is when the futures roll over, there's like a huge gap in your chart, right? Especially on like a day, like a chart on a daily chart on a non-back adjusted is kind of pointless, right? but so sometimes when you get that back adjustment, you know, your previous lines aren't gonna look right. I hardly ever draw lines, so that's why I don't. Although that's probably why I needed to update my little, you know, I don't use fibs, but I was looking at percentage decline from all-time high. That seems to, people seem to pay attention to that, so. Seeing the dollar take another dive down there is kind of what's driving this latest move. Seems like maybe a move started after Biden was done speaking. There's definitely volume coming through here. Although it's kind of moving the wrong direction. I don't know about that one. How do you combine ticks in Jigsaw? So when you're in the instrument settings, like here, if you have the latest version of Jigsaw, you should have this tick multiplier. And so for the E-mini, I want to combine every 4 ticks. So that's what I do. Wow, SOFR is up almost 100 basis points. I wonder how this affects any of Akshay's positions. This whole thing has been kind of a crazy. I wonder, like, you know, at this point, the market's got to be waiting on something, right? I mean, I kind of wonder what the next. There's not like a next waiting point in my mind, except for the open, I guess. You know anything? Well, I haven't used. I've taken a look at it, but I've not like extensively used Bookmap. People ask me that almost every stream, actually. Jay. I think that Jigsaw has the best job. That's why I use Jigsaw. So nothing wrong with Bookmap, but I don't think that their Vista chart is as useful as Jigsaw's DOM. That's all. Biden didn't move the market by telling us the banking system will be applesauce dishwasher ? Well, it seems to me like he did move the market. It seems to me like the dollar moved down. And I think the one takeaway that we can maybe glean from that press conference. So there's been this whole thing about, well, what about all these small businesses that have funds in these banks? Are they going to get their money back too, even though it's not FDIC insured? And yesterday we were being told that they were, but like, you know, there was kind of some conflicting headlines and so forth. So in my mind, I was still a little unsure about, like, will people be able to access their deposits today and all that, right? Well, Joe Biden made it clear that they will, right? That they'll have access to their deposits and that they'll have access to them today. So all these people freaking out about, oh, all of these Silicon Valley companies, they're gonna go out of business and all this stuff. Well, no. Right. So it should just be like normal order of business now. Should be. But it seems like there is still like a bank run going on out there. So we'll see what the next major headline is. But the fact that that's coming from the very top, that Joe Biden is making those promises, says that we can be pretty sure about that one. Yeah, I was looking at Bookmap DOM, but it's Java, and I don't know how I feel about that. I'm really not a fan of building a platform in Java. I think that a lot of people did it because Thinkorswim is written in Java. But I mean, Thinkorswim is a really, really mature product that's been around for a really long time. But I feel that the user interfaces that you get out of Java just tend to not be as good. They don't feel right. I would honestly rather make a framework out of like a web sort of a setup rather than do it in Java. I think I'd like to do it with Rust. I don't know, seeing some of these changes in NinjaTrader. So what happened was NinjaTrader brokerage bought out Tradeovate, and then really quickly, I mean, within the course of about 6 to 9 months, created a NinjaTrader version of their web platform and released that out to the public. So people using the web platform, people were saying, oh, I can't use NinjaTrader. Well, it turns out that those people were using the web platform, not the desktop platform. And they did change the desktop platform. So like now when you go into the desktop platform, there's like a login and all these sorts of things. I can't get in. I don't know if I like already have an account or what the deal is there, but it won't let me register or log in or anything. So but so some people have been like really not liking NinjaTrader because of that. A couple of indicator writers had to adjust their indicators for changes that they made in 8.1 and all this sort of stuff. So I'm like, well, sounds like now is the great time to go and find funding for our Rust, our platform built on Rust, right? Yeah, if only. Maybe we can put our money in SIVB. See, maybe we're lucky, right? If we had done this earlier, if we had been like, all right, guys, let's make that Rust platform, and then we went and we got the venture capital funding and everything, and then they would have been like, go put it in Silicon Valley Bank, and we would have done that, and then we would have had problems, huh? Dodged a bullet there, folks. Dodged a bullet. Zero Hedge has their most recent story is save the dollar or the financial system, not both. Well, the dollar could go a lot lower. Yeah. It's kind of funny because normally when there's a flight to safety, people move to the dollar. But I think in this situation, people are going to flee the dollar, right? Because I think that what they're saying right now is that the U.S. banking sector is having problems, but nobody else's is yet. I don't know. That might change if Credit Suisse goes under, right? Maybe we should have that one up here instead of Zion. New pain. Well, it's trading. Wow, it's only $2. The Japanese do that better than you. Yeah, well, so like when everything hit the fan, Bitcoin took a big tumble, and then over the weekend they sprung right back up. Yeah, I mean, it comes back to this whole, like, the market is not informationally efficient. Not all information is correctly priced into current prices. Well, that's doubly so in Bitcoin. It seems to me like the primary driver of flow in Bitcoin is hope, and you know, it just does what it wants to because it's being driven by, you know, a couple of whales that have a very different view of the world from the rest of the financial system, right? So it doesn't necessarily behave the way that it probably should in certain situations, and that means you got to be careful, because what'll happen is you'll see it, you know, there's a crisis and you see it go up, and so you say, oh, Bitcoin is the safe haven, I'm gonna go put my money in Bitcoin. But then it turns out that it's not actually a safe haven, that it was just the people in Bitcoin are being dumb, and then it crashes 50% or whatever, right? I'm very cautious when it comes to trading it. Yeah. But this particular recovery in Bitcoin seems particularly I don't know, is particularly striking, just because the Bitcoin adherents were so apocalyptic about when they dropped below 20K. We never would have put it in account. It's talking about, well, if we had gotten venture capital funding. You're right, I probably would have put it in a Utah bank. I would have gone and put it in my credit union, probably. Well, it would, you know, if I think that in order for us to do this sort of a thing, for us to build a platform like that, I think that we would probably need like several $1 million. Like, I think that it would take me and a couple of other guys getting paid $100,000 a year for multiple years to get a working platform out. So it would have been like $1 million put in the bank that wouldn't be FDIC insured, right? FDIC insured. And that's really kind of the problem, right? Is that it's always been like, well, the reason that you can have confidence in the banking sector is because we have the FDIC, and so now your deposits are insured. And it's like, well, yeah, that works for everyday Americans who don't really need it because they don't keep cash in the bank because they work paycheck to paycheck. So the people that actually need the protection and that the protection makes the difference to the economy aren't insured. Why should they keep their money in a regional bank at this point? So you get the bank run. So this is why I think that the administration is doing the right thing here, right? They're saying, well, we're going to make everybody, you know, all the depositors will be made whole. That's what you got to do, because if they came, and a lot of people on Reddit are trying to say that it should be different, right? A lot of people on Reddit are like, well, they shouldn't do that. Isn't this a free market? Yeah, it's a free market, not a stupid market. Okay. Look, you don't want to go down that path. Seriously, let all of the people that had money in SIVB get zero, and then go and see what happens to your banking sector. It's not pretty. You don't want to do that one. So they're doing the right thing, but I do kind of wonder what are the more permanent changes that we're going to need to make here. Okay, so we are open now. I don't know why I didn't get my ding sound. Sometimes it goes and sometimes it doesn't. I really hate that. But I am seeing a little bit of selling on Credit Suisse here on the open. Okay, so there's the end of your first bar. I would say not too bad. Maybe they buy the dip. Maybe, I hope. Fingers crossed. Fingers crossed. Pretty calm. I feel calm right now, at least. I thought that by this time today I would be like hooting and hollering and everything about, oh my gosh, look, it's doing this, it's doing this. Well, I feel like it's back to business as usual. That could be like I'm getting a false sense of security here. Could be. Okay, SR3U3 already 25 basis points off the highs this morning, just saying. Jeffrey Gunlock, the 2-year yield is down 100 basis points in 3 days, but don't worry, everything is just great. I'm on CNBC with Wapner at noon Pacific time today. Oh. Why would he give us specific time? Does Jeffrey Gunlock live in California? Joseph Wang, broadly speaking, only big banks hold lots of agencies and treasuries as regulations strongly encourage them to. The thousands of smaller banks make loans rather than buy securities. Yeah, investors in the banks will not be protected. They knowingly took a risk, and when the risk didn't pay off, investors lose their money. That's how capitalism works, says President Biden. Yeah, okay, except for all of these regional banks that invested in treasuries and took the risk and are getting their money back, essentially. I don't think I'm not seeing a whole lot of people talk about this new facility that the Federal Reserve created to deal with this crisis, because I really think that it's quite funny, right? Like, they literally created a financial mulligan. The banks loaned the government money, right? They bought bonds. The bonds are down on their position, so now the government is giving them cash equal to their original investment, the par value of the bonds. Right? And I don't know if there's limitations on what they can do with that, but I mean, they're using that cash to make money and run their operations until those treasuries expire or whatever. It's like literally a financial mulligan. It's like, oh, so we screwed up. Oh, don't worry, we can get, like, if I was making a video game, right? If I was making a video game that was like you run your own bank, right? And you screw up, I would think in a video game like that, you'd want to give people like the opportunity to, like, you know, because you're gonna screw it up at one point, right? So to kind of ease them into it, to kind of ease the skill curve in the game, right? We could give them BTFP. That's what I would put into my video game to. Yeah, Biden just read off the man. Look, he look at him when he walks off camera. Like, go back and watch it again. I'm not gonna pull it up here, but go watch it again. That man had purpose, right? My handlers told me, go out, say what's on the card, don't F it up, don't say anything stupid. This is a big deal. He knew. He went out and did what he needed to do and then get off. For sure. You could say he's a pudding brain, but I thought that press conference was like a rare win for Joe Biden. And I do think he's right that they're going to have to change that law back with Congress so that the regional banks are subject to more strict reserve requirements. Well, I shouldn't say that he's right. I mean, who knows what the effects of any of these changes are, but it's probably going to happen, right? Bitfinex retweets John Reed Stark. I don't know who that is. Given Signature / Silverbank's failures, any bank doing crypto-related work poses a systemic threat and faces a 24/7 U.S. regulatory colonoscopy. If there is no way to cash in casino chips after gambling, people will stop going to casinos. Buy crypto. And meanwhile, the cryptocurrency is soldering on just fine right now. So the KRE is moving down slowly but surely. Let's zoom in here, like really tight. Credit Suisse, definitely the most volatile of these. I went by a script club and they had a big sign outside saying we take crypto. That's hilarious, dude. I kind of wonder, like, I mean, there was a lot of people that made money in crypto for a time, or at least they were particularly loud. But I don't think that very many of them actually cashed out, and I think that there's a number of them now at this point that like we're living the high life and are being humbled, right? Well, there was a couple in stocks in general that were doing that too. There was like, oh, we got Lambos and now we can't return our Lambo and we need the money. Yeah, Bitcoin's still up about 10% in the last 24 hours. One of the cleanest divergences versus other risk assets I can recall. Yep. But you know what? I think that Bitcoin eventually gives it up. I mean, if this turns into an extended down, so like here's the thing: is it could be like down big today, up big tomorrow, and you get the volatility, and like that's it. That's the bottom, and it's already done and over with. Could be over just as quickly as it started, right? But if this turns into a little bit more of an extended downturn where we go down for weeks and weeks and that sort of a thing, because we're in like a real recession, Bitcoin's going to take it too. Bitcoin's going to take it too. And it'll get hit harder when they realize when they're forced to puke, right? Joseph Wang, there is little chance of a systemic banking crisis, but badly run banks can still fail. This post describes how banks manage their assets and liabilities, shows SVB was very poorly run, and suggests higher rates / quantitative tightening will challenge banks in the coming years. Worth a read. Too long for me to read to you guys now. Oh, actually, no, it's not too bad. Hidden to market. There is a little risk of a crisis in the banking sector, but that does not mean there aren't badly run banks. QE and Basel III have made the banking sector significantly more liquid and resilient, such that a replay of the great financial crisis is very unlikely. However, individual banks and under poor management can still be subject to bank runs. At a high level, a bank has a short-dated liabilities and longer-dated assets. A well-managed bank holds enough assets to meet potential outflows, but also manages its liabilities to avoid substantial outflows. This post reviews the basic liquidity problem banks face, shows that SVB was particularly poorly run, and suggests that higher rates in QT will challenge bank liquidity in the coming years. These ES bids look strong. Well, the volume looks to the sell side, though. We're just getting some major volume here in the treasuries. I guess maybe to the upside. Like, look, it's getting smacked around there really hard. Asset values. Banks don't have to mark all their assets to market, but unrealized losses have a direct impact on their available liquidity. All assets on a bank's balance sheet fluctuate in value over time depending on factors like interest rates and market conditions. Suppose a bank bought $100 in treasuries that then traded at $90 as interest rates rose. A bank has a $10 unrealized loss, but if they held the treasuries to maturity, the value would recover to $100. These fluctuations affect both loans and securities and can be managed through derivatives. A bank's unrealized losses are opaque because of accounting choices and valuation difficulties, but usually those losses don't matter unless you really need to raise cash. Banks have a wide range of options to raise cash, but all those options depend on the market value of a bank's assets. A bank could sell an asset outright at market value or borrow against it. There is a range of lenders that are willing to lend secured to a bank, ranging from private investors to federal home loan banks to the Fed's discount window. But they will only lend against the asset's market value plus a haircut. A significant amount of unrealized losses means that a bank has less potential cash to meet withdrawals. An exception is the Fed's new facility, which is willing to lend against the face value of treasuries and agencies. Note that medium and small banks usually hold very few treasuries and agencies. Not on the ladder volume, but they're lifting. Well, what I'm saying is, so when that happens, it's because of a change in a correlated asset, right? So the dollar rose back up here, and you saw the treasuries come back up. But the market orders overall continue to be mostly sell. Liability management. Deposit liabilities are difficult to value because they can in theory be withdrawn at any time but are in practice sticky. The account balance of a typical depositor fluctuates, but they usually keep a certain sum in the bank. Rather than an overnight loan, a deposit is more like a long-dated zero-coupon bond. The value of deposits are not marked to market, but in theory they become less valuable with higher interest rates. Higher rates can reduce the value of a bank's assets, but they can also reduce the value of their liabilities. A bank that manages its liabilities well will not need to fire sell its assets to meet withdrawals. Banks have a number of tools to manage their liabilities. A bank can structure its liabilities by issuing CDs or other contractual borrowings that are not due until a set maturity. can also diversify its depositor base across account types, as some depositors are more volatile than others. For example, retail depositors are protected by $250K in FDI insurance, so they tend to be very sticky. But large depositors are not fully covered and may withdraw their money suddenly in fear of losses. A bank whose deposit base is almost entirely uninsured is very vulnerable to bank runs. Love that mumble rap in the background. The level of liquidity in the banking system is exceptionally high, but is set to steadily decline from higher rates and quantitative tightening. Higher interest rates reduce the market value of bank assets, which reduces the amount of cash that a bank can raise. A secular upward swing in interest rates can potentially impose huge losses on both the securities and loan portfolios of banks. At the same time, quantitative tightening is set to steadily withdraw over $1 trillion in liquidity out of the banking system over the next 2 years. This is not a problem today, but it may be in the coming years. And that is the end of the post. Well, that ends really abruptly. You need a conclusion. You need Mr. Wang. You need a conclusion, Joe. Yeah, and the market's fear greed index is at extreme fear. Well, so all said, so far we've had a little bit of a sell since the open, but nothing too dramatic. Maybe these refreshing orders sometimes turn into market, why we're getting these bid spikes higher. Well, I'm not so sure. So I mean, the data that we're getting here is accurate, right? So when market orders are not what's driving price, we've kind of got two options here. One is that they're being passive, like there are buyers or sellers or whichever way it is that you want it to go, but they're being passive, and you're seeing that reflected in icebergs. There has been a few icebergs in a few places, but overall I'm not seeing, you know, unusual liquidity in spots or anything. I think that the movement that we're seeing has more to do with correlations. So if you don't see any kind of absorption or anything and it just kind of moves, that's usually indicative of market makers adjusting their bids and offers based on a correlated asset, right? So the treasuries here, they're just not really I don't think that they're really telling me a whole lot, other than that since we got in here, because I kind of tried to do a little buy at the very beginning, just fooling around, and like it immediately turned back down, right? Ever since then, it's the market orders in the 10-year have been sell. So S&P 500 not doing anything too crazy, but just now all of the sudden big buy coming in. So I think that I'm biased towards long in the equities, but I'm not gonna touch anything. Well, that's nice. But it's, you know, trading these is really hard, right? Because how far does it go? In this kind of a market, I think that there's lots of good reasons to just try and hold it all day, right? But there's also lots of good reasons to be like, okay, I got 20 points. Okay, I'm seeing some stuff about the interest rate. Okay, we're back to 3.5. That's interesting. I don't know. I think part of what you might see here is like, if no more scary headlines come out, the equity market will continue to rally. But I'm not going to try and guess what it's going to do. I'm just going to be hands off today. I think that that's the appropriate thing for me to do when the liquidity is so low in the treasury, is to just be hands off. I know that's leaving a lot of money on the table, but it's so volatile. I guess if we feel like, oh, I don't know. I am kind of leaning towards the short side in the treasuries, but it looks like everything is turning there too. Like oil is kind of slowly started to turn itself back up. Somewhere around 3,900 might be. Well, it looks like there's a lot of positioning around 3,900, so might want to keep an eye on that. Everyone says be greedy when others are fearful, but a day like today is a reminder that it's never easy. The bulls are making a bit of a stand here, says Forex Live. I want to check a few charts here. Microsoft's doing well today so far. I've been thinking about Intel. I've been thinking about doing Intel or Microsoft. It's a tough call. Microsoft has definitely performed better as of late. Well, over like, let's say the last 2 years, maybe. Oh, wow. Intel is actually lower than it was in after COVID. Well, AMD has been eating their lunch, so. Okay, Treasury, well, the whole market experiencing a little bit of a pullback here. KRE turning down particularly hard. So I'm not seeing it in Credit Suisse, but these regional banks are getting hammered all of a sudden. Oof. And then my overall portfolio not looking so hot today because of Goldman. Okay, well, the S&P seems to be holding. So there's been like a little bit of niddling around everything since they come to 3889, 3890 or whatever. But they've been handling it okay, I think. So Treasury's coming down there pretty hard all of a sudden. I'm gonna try. Three 517 for the 10-year interest rates. They're kind of at the bottom. The 5-year is not at its bottom, but the 30 and the 10 are. Let's see here. A bunch of stuff got halted here in the first 10 minutes or so. Including Schwab. Let's come back and look at the halts. Customers Bank Corp, Bank of Hawaii. Oh, Zions did get was halted for a moment. That's what this gap is right here. So I think that was like a decline of 5% or whatever it might have been. I don't know. That might have been a circuit breaker. Yep, there's lots of these getting halted all over the place. Good grief. Even though, and note that even though the S&P 500 is like rallying, that like KRE, the banking iShares, it's like it's still down / at the open. So okay, well, it looks like I got a little bit of a run there. I'm kind of wondering if the E-mini can actually keep this up. It kind of is looking like that the banks might still have a little bit of pain to go through. Okay, so First Republic is back up. So like if this started at 30, oh yeah, these are some of these moves are like actually really massive. So I think what I'm gonna do is I'm gonna close these so that we get a little bit better of a, yeah. Okay. I don't know why oil is converging with the S&P. I think you'd see in these kinds of environments, you see a lot of heavy correlation, right? Though right now, I mean, one of the biggest correlations has been the dollar. The dollar has just kind of been middling, while the E-mini has been rallying. So one to keep an eye on. Wow. Oh boy, I always find it amusing people on Twitter during times like this that are tweeting about technical analysis sort of stuff. It's like, I don't think that your technical indicator matters in this situation, bro. Okay, well, let's read the latest Zero Hedge Fear piece. Small banks are crashing. Over the weekend, when parsing through the carnage sweeping the U.S. banking sector, we analyzed which banks are facing the highest deposit run risk in the aftermath of the SIVB and now SBNY failures, and focused on a handful of names who have the bulk of their funding in the form of deposits which are now suddenly at risk amid what seems to be a major bank run. JP Morgan's Michael Semblas, whose bank is poised to benefit the most from the ongoing carnage, chimed in with the following chart, which added an additional axis looking at loans plus securities as a percentage of deposits, but which after the new BTFP bailout facility is irrelevant since the Fed and the Treasuries are effectively backstopping unrealized losses on securities. So we are really down to which banks have the most bank run risk, which, as we explained, are primarily America's small regional banks. How are they holding up today? Well, not good. Here is the KRE index. Okay, KRE was the correct one. I figured it out on my own. No thanks to you, Zero Hedge. Okay. And while its constituent members are having a very bad day, as the following headlines reveal, First Republic Bank halted for volatility, down 65%. PacWest halted for volatility, dropped 41% to its lowest on record. Regions halted for volatility after pairing 31%, dropped 20%. Western Alliance sinks a record 76%, halted for volatility. And this is how the various banks are doing overall today, and he's got a big list of them. The take home here is that unfortunately Joe Biden's 9 a.m. pep talk did little to boost confidence in small U.S. banks, and yet the S&P 500 is up from its size. So what do you think of that one? Or as we put it earlier, it would be a savings and loan 2.0 crisis, but we regret to inform you there are no savings. I don't know. So I'm sitting here like, is it over? Is it over? I'm short treasuries, and Zero Hedge is still full on with the panic. I tell you what, though, if Schwab fell, that would be like crazy. That would be a little shocking to me. It would be a lot shocking to me. Japan, no changes to the Bank of Japan monetary stance. Of course not. Someday, aliens are going to land on the planet and bringing us new technology. And they're going to be like, we have this new technology and it's going to bring economic prosperity to all humans. And we want the Japanese to take the forefront for developing this new technology because we caught your Gundam series from space and we just loved it so much. We want to pay you back for it, right? And then Japan still won't raise their interest rates. That's what... Well, I decided to take another contract there, and it's turning against me pretty hard now. I wonder if bad car loans are the next shoe to drop. Well, people have been concerned about that a lot, for sure. It's definitely been an area of interest. So the thing is, I don't really know how tight it actually is. Like, the thing is, that was something that got brought up like 6 months ago, you know? So I haven't seen anything recent. So there's no, you know, how can you say what the current situation over there is right now? This market is not doing a very good job at like extending. Okay, NatWest. I've never heard of them before, but they say we do not believe that the federal rate hike rates in March. Okay. Cat Turd says that they're rigging the stock market to avoid making Biden look bad because multiple bank stocks have been halted. No, that's, you know what? Don't talk about things you don't know about. You have no effing clue what you're talking about, bro. And lots of people listen to that guy and will just make shit up. Oh, I find that disheartening. Okay, but it is curious to me that the regional banking ETF is still not looking too good, but the larger index does seem to be trying to build a rally here. I think that we could say, well, I mean, look, it's been 50 points. 50 points is a lot. 50 points is a lot. When the right-wing political punditry talks economics and markets, it makes my brain hurt. Why is the market moving so fast? Well, so that's not a simple question. I mean, the long and short of it is because we're experiencing a banking crisis, right? But the more detailed answer would be going into liquidity and talking about how lighter liquidity means that markets move further, right? Because it has places to be. Yep, it's got to get there, and it wants to get back to 4,000 real quickly. Nah, I don't know. It doesn't seem like it's going like that at the moment. Yeah, if you catch a good winner, you just bag it, and because you can see here. So this position, this sim position that I've got on here, this is me screwing around, being dumb. Okay, just. So, you know, probably, well, I guess it is on my serious account, my serious sim account, but it's a bit of a gamble, right? I can't put my own money on this. It's too crazy, you know, but if something happens, I get a headline that I think really strongly suggests it's going to move one way, and I bag like $100 over here in the micro treasuries, I'm just taking profits, man. Yeah, they are trapped. You're right. It's like, I think in this situation that the amount of like trapped traders that you could have in a situation like this is probably pretty small compared to the potential amount of market orders lurking out there. So I don't know if watching for that is as useful in this situation, but it could do. Like, I mean, if they decide to start pushing towards the daily high again, it's not going to hurt, right? Is this thing right here. So the, again, regional banking ETF down since the open, despite the S&P 500 having rallied. That's sticking out like a sore thumb to me right now. Okay, so now the economic leaders from other countries are being like, oh, we don't have any problems. Hoping the contagion does not spread, right? Now, Financial Times also tweeting headlines: First Republic and other U.S. regional banks stumble on fears of deposit. What it changed? Deposit flights. Light. I like that. Lights. I'm so tempted to come in here and take a trade, but I'm like, why do I want to take a trade? No, that's crazy. I don't think I'm going to take a trade. S&P, well, no, wait. Are you like, you're behind here? We've been open for like almost 45 minutes now, bro. So it did not fall on the market open, but perhaps it could fall from here. Perhaps they never get above, they did get to 3,900. So let's say maybe 3,900 is the ceiling and we sell from here, right? Which would make this short in the treasury not the best short. Which bank are we running next? Wait, are you saying that they're gonna put us in charge of a bank? That would be awesome. No, of course I know you mean you like go and take your money out. Well, where do you have your money? Like, that's the problem, CD-ROM, is that you have to have money in the bank to do a bank run on the bank. I got all of my stuff in a credit union, so I don't know if that's not as fun. Doing a bank run on a credit union's not as fun, right? Just saying. No monies. So can we talk about this this other thing that I'm seeing people get on? So here's Joe Weisenthal. I don't know who this is, but Bitfinex is retweeting him. He says, in today's newsletter, I wrote about why I think bailout is the right word, and more importantly, why I don't think it was really so different from 2008, or at least as much as people want to believe. So, the etymology of this is kind of interesting, I guess, but like, why does it matter? So I'm gonna run into this all the time. So why does it matter what we call it? Was it a bailout? Why does it matter if we call it a bailout? Why does it matter? Well, I'll tell you why I think that they want it to matter, at least. I think they want it to matter because bailout has a negative connotation to it. So they want to make sure that it's called a bailout so that everybody knows that what happened was a bad thing that we shouldn't be doing. Right? That's what I think they're getting at. But I mean, their solution this time was very, very different, right? Taxpayers not on the hook, at least not yet. Maybe it gets worse and then taxpayer is on the hook. But so far, taxpayers not on the hook. They're not directly like giving them money per se. They're not like doing any of these other things like quantitative easing or anything like that. It's more giving them a loan, but it is a handout. I mean, it's a huge gift. Let's put it that way. Are they helping these regional banks out a ton? Yeah. They are helping them out a ton. But I mean, what do you want? What do you want from me? You just want the whole regional banking sector to go kaput and have JP Morgan be all that's left, and then the JP Morgan becomes the first bank of the United States? Is that what you people want? Yeah, bailout makes the common folk red with hate. You know, I really thought that there would be a lot of wailing and gnashing of teeth on the stream today. I thought that you guys would be a lot more upset about the Fed's decisions overnight than nobody's really said anything about it. On TikTok, man, when I explained on TikTok what was going on, because I find it amusing. I do. This is like the most entertained I've been in years, perhaps my entire life, watching this whole thing unfold. They were so mad about it. So I kind of thought that there would be a lot of angst this morning on the stream, but you guys have been pretty. I think that you're too busy trading or managing losses or what have you to worry about that. Okay, 115 even. I'm worried about the S&P 500 rolling over and down, and I don't know if that means that the treasuries will move up in correlation with it or not. What was the angst for it? Well, because it's not really fair, right? Like nobody's giving me $1,000 in cash for my losses in Sumo Logic, for instance. Right, one which the company is getting bought out, so I'll never make back. So I thought that it was a good stock. So I got screwed over by the company, really, for them letting themselves get bought out at a shit price, right? Super awful. Why isn't anybody giving me a loan? You give me $1,000. So go back, I'll put it in the treasuries and make the $50 or whatever, and I'll feel better about it, right? Listen, it's not fair. It's not fair, but it's never going to be fair. I had a whole speech prepared for you guys about why it was so, you gotta let it go. But it doesn't sound like any are having that problem, so maybe I'll save the speech for TikTok. Watch, I'll do the speech on TikTok and then nobody will care. I need to put it on YouTube. I won't be surprised if the S&P 500 falls 100 points from here. Okay, so 3,800 before end of day. Could do. Yeah, they don't bail us out because the economy doesn't collapse if we lose money. Exactly. That's your problem, guys, is that you're not systemically important enough. So you got to get bigger. You got to get bigger. See, here's the thing, because I've been doing this since the 2008 crisis. I kind of see how this goes. And here's the thing, because sometimes when we get these bailouts, some people have like a really hard time dealing with it because it's not fair. But here's the thing that you got to realize, okay? And here's the thing that I've realized, at least, and that gives me a lot of peace about the whole situation, right? And frankly, it helps you understand financial markets and the way that things tend to go in general, all right? The thing is, God did not create capitalism, okay? The financial market is an instrument that was created by man and has its flaws. And whether or not you believe in God or not, I mean, you can say that that's true, right? We made the system, and as a result, it is imperfect, and there are inefficiencies baked into the system that you can't escape from. Right? So all these people, they're always saying, well, if you just changed this one thing and didn't let the greedy corporations take control of everything and tax them more, then we would solve all the problems. It's ridiculous. Okay? To say that you're going to solve all the problems is like saying you know the mind of God. This is a problem that exists in our markets itself, and it's going to be like that until God himself comes on the earth and takes over everything. And I'm sure that when he does that there will still be economic freedom and commerce. It'll be more like capitalism than socialism, okay? But it's not going to be what we have today. It's just not, right? So in the meantime, while we're here with these imperfect financial systems, what does that mean? Well, one of the problems with the financial markets is that they are prone to endogenous shocks, which means that sometimes bad things will happen that is just created within the financial system itself and has nothing to do with anything outside of it. And what do you do when that happens, right? You just let everything fail? That is a bad idea, okay? That's like playing musical chairs with no chairs. Nobody wins, right? So what do? You put more chairs out so that people can keep playing, right? And that's what happens. Is it fair? No, it's not fair. But you don't want the game to end. The whole point, it's an infinite game. The whole point of an infinite game is to keep the game going. So we put more chairs out and we keep playing and have fun. And yeah, that means that some people are worse off than you and some people are better off than you. But that's just the way that life is. And I think that you can find a great deal of peace by accepting that people are not equal and just doing the best with the circumstances that you're given, right? But there's no reason to get upset about it. You know, you have to detach yourself from it so that you can make the correct decisions, because they're going to keep the system going. That's just what happens, right? Yep. We're too little to fail. So that often it means that we end up getting the short end of the stick. Yep. I'm seeing some pretty heavy selling in the 5-year, by the way. 5-year is like now negative 18,000 on the session. So that's a little curious. Forex Live says Bitcoin and gold on fire. Well, gold is definitely doing well. Oh yeah, okay, so Bitcoin is taking a jump here. They're actually higher than before that huge decline below 20,000 that freaked everybody out. Some trap buyers above 28, yeah. This movement, one of the issues that we have is like it's kind of hard to discern what is noise, you know, because it's just going around so crazy. Oh my gosh, Jack Post CBX on Twitter has changed his name to No Bailouts Poso and given himself a strange avatar with sunglasses. How squirmy are they? I don't know, man. Like I said, Uzi, I don't know if trap traders is the most useful thing to look at in this kind of a situation, right? Because at any moment, a flood of market orders could come through that completely cancels out anything else that's happening, right? And the liquidity is so light. I'm more interested in trapped traders when it's a market dominated by the market maker, and that's not this market, right? The market makers are, you know, left. they all turned tail and ran. I'm not getting my fill at 21.5 though. So I'm wondering, there was never really a cluster or anything like in this area. I guess there's a little bit of volume at 25, but my positioning was never very good. So I think I kind of need to keep that in mind when trying to interpret some of this volume. And I'm at the moment, you know, there was definitely some heavy selling in the 5-year, but like this latest move back to 23.5, it's not like I'm seeing like a significant change in volume to make it happen or anything like that. So I think that we're still kind of within the noise. It's still legible. Well, I think it's legible, and I think that you are probably correct that there were trapped traders on the short side, and now there are some trapped longs. That's probably true. I'm just saying it's probably not a very effective predictor of the future flow here. But the thing that I find very, very uncertain here, yeah, nothing is. It's totally, you're totally right. Nothing is a very effective predictor of the flow here, unless we got a headline, right? Which is why I'm not taking the live trade. But man, the trend here is particularly uncertain, isn't it? You know, like I think your gut impression would be on a day like today, the treasuries could really, really trend one direction or anything. But this is just a slog, isn't it? But I guess that's because we already came back to 3.5 so quickly. You'll get a headline in your predict future orders of a move, and by the time you put your hand on the mouse, you're late anyway. Sometimes that does happen. Sometimes that does happen. In this kind of a situation, though, the kind of headlines that you can get can be so crazy that you get plenty of time to get in, right? I think the better play, yeah, I say you in the general sense, not you specifically. Oh, okay, well. Because it really is like, I think that one of the best advantages a retail trader has is in situations like this. Hold on. Okay, I don't think that one's a big deal, but I did see a little bit of movement there. And I didn't understand what he was talking about. He was talking about one of the banks. There's those situations where like a really clear change happens and all of the banks have to like readjust themselves is a situation where a retail trader can have a big advantage. Like when this started falling apart, like on Friday, you know, we didn't really take advantage of it. I didn't understand what was going on Thursday, and then on Friday I was too afraid to touch it. But I saw some guys that took some puts on Friday after the non-farms, man, that made some real bank, like 10-to-1 winners on 0 day to expiration options, right? So there are these are some times where a retail trader can make a ton of money, right? And what I always find happens to me is I'll get so excited that it's like, this is like the high point of the market. This is like the point of greatest interest in the market, you know? And then I just get diced to pieces, right? And then after that happens, and I'm like, well, I can't trade it here anymore. I took too big of a loss on the month or whatever the deal is. And then all of the good trades come along, right? So now I think is the time to be a little bit protective, because, you know, 2 weeks from now could be awesome trading, right? Well, I did get one fill. Looks like that swing may be done. Oh yeah, this is definitely, like, there was definitely a big short in the 5-year, and I would say to some extent in the 10-year as well. But the price movement looks to me like an oscillation around 115, maybe 114.28, something like that. Like it looks to me like the big move had already happened, and it's just settling. And it's just really, really volatile, long time to get it to settle. That's what it looks like to me. So really what we need to do is we need to get our average position like above 20. Let's say the VWAP. Now let's say the point of control there, 27.5. That's what we need to do. Oh, there's a little bit of a encouraging jump in the KRE. So what do you guys think on techs here? I wish that during the pandemic I'd gotten into AMD. I guess AMD is down 50% from its highs. But I think your potential upside in AMD is like 2 to 1. What's this? I'm gonna try playing that. And Nvidia is still doing really well, right? There you go. Oh, Nvidia looks amazing. I feel like that well, if Nvidia came down a ton, then maybe we could get in on it, but what do you want? We could do a poll. Well, it's a little bit too late. We can do a poll tomorrow. What do you think? Is there any other tech stocks that I should add to my short list? I got right now the top of my list is Microsoft and Intel. Do you think that there's a tech stock that we can use to replace Sumo Logic? And I would prefer like a high beta name. Would love suggestions on that front. Guess we could do Facebook too. No, I hate Facebook. I don't think I want to be in on Facebook. Facebook may at some point be getting to a good value buy though. I know that a lot of hedge funds screwed up saying that, but come on, it's got to work at some point, right? I think that when tech companies turn from being high growth names to like the social media names just become consistent blue chip stocks, that Facebook could be a good play in that arena. They've certainly got a lot of things that they got to fix over there though to get to that point. So there was a little bit of a spoof and we did kind of move up. I don't know if he got filled but it's not there anymore. No, Lucas, don't get me excited about that. What are you? You don't pull my leg. He's pulling my leg, see? I'm loading it up. But I don't believe him. Let's go check it anyways. I'm sure that they're not doing anything interesting. Oh, they're up a cent today. We're up 10%. You know, if I just showed you that chart and didn't tell you that it was garlic coin, I think you would probably be like, oh, that's a pretty good looking chart, huh? Yeah, up 10%. Not bad. Momentum coming in. How's the 7-day chart look though? Yeah, it's just noise. It's just noise. There has been some, no, how much, maybe I need to go back to a year. Nah. There's been some points at which it seemed like garlic coin was starting to build some momentum, but then it comes back here and you're like, nope, it's dead. There was that big pump and it just kind of has been slowly dying ever since. Where was it? Yeah. There was this big pump. I mean, look, it's going to happen again in the future. I'm pretty confident that it will, because this all happened after the halvening. So there was a halvening and went, and then eventually people caught on. And there was this big thing, and then there was a big guy that took his profits from the top, and that stopped it. If he had not taken his profits, I kind of wonder if it would have continued, because this was still fairly early on in the whole Bitcoin nonsense drama, right? And some of this movement is kind of more just the correlation with Bitcoin, right? But then slow death, and now it's just dead. Nobody cares, right? Nobody cares. Someday, do you remember that day that Coin Market Cap went like haywire and was saying that everything was worth like $1,000 and everything? Oh my gosh, because like I came in and looked at that one and it told me that I was like had $100 million or something, and I'm like, pretty sure that's wrong. Although, to be honest with you, when Bitcoin was taken off there, I mean, I was like, stay calm, it's not time, I can't get out anyways, so don't worry about it, Seth. You can't get out anyways, so don't worry about it. But it was starting to wig me out. I was like, gets crazy so quickly. If you really get lucky and you're looking at it, it gets crazy fast. So what is this? On Fidelity, it gives me an equity summary score. Is that like out of 10 or something? So Intel is neutral. Microsoft is better. I think that's like underlying analyst opinions. So I suppose I would prefer something that has like neutral analyst opinions. But what would be something that has a really strong buy on it right now? Yeah, it's turning to trash real fast, isn't it? And I added another contract too. Oh, it's okay. I'll close it here at the end of our session, and then ignore the rest. Because remember the other day, I had that one that was like being really tough, right? And then after the stream, I left it, and after the stream, it did go and it ran. I don't think that I got nearly as much from it as I probably should have, but I did eventually get it to go. So maybe I just need to be patient enough with it. Who knows? The S&P 500 is just kind of chopping around 3885 or so. So it's really, the first hour or so has been really quite uneventful, hasn't it? What's a stock that has a really positive analyst opinion? When you halt the entire banking sector, that's a lot of activity taken out. It could be that. Okay, let's come to TradingView here. And use the screener. Stock. Do they have one? Trend following, what's that one? Oh, yep. Year-to-date performance. GNS. No, I don't get a score for them. Let's see here. I gotta change here to be filters. Index. Let's keep it to the S&P 500. Okay. So NVIDIA is the best performer. Let's do 5-year performance. Oh, and Moderna is. That's funny. How about Home Depot? I bet that one's really liked. No, that's just a neutral score. Dude at 07 is standing firm. I'm wondering if the dollar is moving down here, so that could maybe help them. Target? Oh no, that one's terrible. Is it they have one here that's like, let's see here, maybe, okay, so if I go to click overview and then I try and add something, is there one that's like sentiment or something like that? Analyst opinions. ultimate oscillator. Nah, there's not. Your screener is useless to me. Hey, I wonder if Fidelity has a good screener, maybe. News and research stocks. Today's investment ideas. Arista Networks. Never heard of them. A-net. Oh, they do have a stock screener. Equity summary score. Very bullish stocks. The stocks that it gives me when I do that are very... I've never heard of them. Never heard of them before. Okay, so can I let's see here. Ooh, I can do it by peg ratio. Thank you. Okay, but how do I criteria, add criteria, search criteria, index, S&P 500. There we go. Oh, only 29. Microchip. Oh, wow. That one's doing pretty okay. Hershey's, really? That's interesting. Comcast Corp? Oh, please no. Please no. They did seem to come up to that last pivot and are kind of middling around a little bit now, but... Equity summary score. Let's do it to there. Okay. And then I want to see I want a good peg ratio. Yeah. Holy crap, some of these have insane peg ratios. Kellogg's 9.61. EA, no thank you. Could maybe do Verizon. Oh, there you go. Home Depot is up there. American Tower. I would prefer to get something that gives me a little bit more... how do we say... Well, Goldman's peg ratio is pretty good too. Well, actually, you don't want a high peg ratio, though, do you? If we're going to buy something, we don't want a high peg ratio. Once you get into like the threes is when you kind of... JP Morgan has a negative peg ratio. That's interesting. Nah, we want something more like 1. There you go. Google is not bad. I feel like I would rather have Western Alliance is halted again, by the way. I feel like I would prefer Microsoft to Google. Let's see if I can directly compare them. Ulta. Meh. Meh. BK. There you go. We need to get a bank in there. Raytheon. Raytheon actually has been kind of on my list, man. Where is my list? Well, we have seen the volume kind of turn to the upside in the 10-year. I think that that's enough for me to take the trade off, but I said I'll hold it until our session close. So I will do that. I do kind of wonder if, I mean, if nothing crazy is going to happen, can they actually hold these numbers? I guess we'll see. I don't need to worry about it too much, do I? Check Zero Hedge and see what they're saying. Credit Suisse CDS hits record high as Silicon Valley banking crisis spreads to Europe. Zoom out here on the K area a little bit. I don't know, man. This is not the fireworks that I think a lot of people were expecting today, is it? It's kind of been like, well, it doesn't look very good, but it's not like a dumpster fire. It's kind of looking like maybe the worst of it is over. If the 2-year yield declines another 11 basis points today, it will be a bigger 3-day decline than the 1987 crash. Really? Yeah, man, that was a recession. I don't know if that's justified, though. KRE is getting a good candle there on the 1-minute chart, man. Oh, are we at highs? Okay, puke. I don't want to watch that if I'm long into the highs. That'll suck. I think you did get a little bit of puking there around when they came through 07 like Uzi was looking for, but remains to be seen if they get to the highs. So the thing is that taking the trade that like they're gonna bust the high and extend hasn't worked very well today. It's failed like 1, 2, 3 times. Need to check my bot again. I have it like doing the ban, but it doesn't tell me what happens. So I need to might not have the permissions. Nicey halts Charles Schwab. Oh, that was 50 minutes ago. Never mind. I think that one's passed. Let's see what's halted right now. Current halts. First Republic, Western Alliance. It looks like most of the halts have been cleared, so. Except for, of course, these ones that were halted like days ago. I think it's important to remind that this higher volatility is happening amid rollover. Well, in the E-mini it is, yeah. I'm just saying I've never been able to notice or sort out any kind of uncertainty with the equity indexes during the rollover, other than that the volume just gets really sketchy, right? Whereas I do see that with the treasury. Well, it's time for me to go, so that was an interesting watch. It's unfortunate that our sim trades didn't work out. Maybe tomorrow we'll be able to take some trades, though. The CPI tomorrow is going to be huge. It's going to be so nuts. It's going to be so nuts. So we'll see what happens, all right? I'll see you guys then. In the meantime, stay excellent, team.